what, a Tuesday? Seems like a Wednesday to me, doesn't it? It's a Tuesday, the 1st of May. Hoo-hoo, yay. Is it a holiday where you are? Many places in the world, it's a holiday. It is, yeah. In Asia, it is. In Europe, it is. Commie Day. It's Women's Day too, isn't it? You gotta remember, my day's just starting out, so I haven't, I don't commute to work. I don't listen. I don't get my news from a radio or anything. So I usually current events. Yeah, Labor Day. Labor Day, eh? Union Day. Is it Women's Day? Or anybody? Does anybody know? So anyways, hey, good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk when you cannot afford to lose. Ni hao ma. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We are a boutique foreign exchange brokerage firm. We would like to become the prime broker to your successful Forex trading business. We are here today to earn your loyalty and respect by investing into you up front through these webinars. I am here to share my experience of trading Forex for pretty close to 15 years now. The good, the bad, and the ugly, technical analysis, fundamental analysis. The whole idea is to help you survive and then help you thrive as a foreign exchange trader. That is a symbiotic relationship, which means if you succeed, we succeed. The reason for that is we don't bet against you. When you click the trigger, you enter your trade into the interbanking system. And therefore, if you thrive, we thrive. And I like it. I like it that way. So I do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today, except the very first Friday of the month, which is this Friday. This Friday coming up will be the first Friday of May. I believe that's May 4th. And for that event, I will be at fxstreet.com. Typically, about 1,000 people attend that webinar, and then another 1,000 watch it on the weekend since they've missed it. Maybe they're in Asia or whatever. Okay. Oh, Jim's got his account verified, set up yesterday. Right on, Jimmy. So anyways, hey, I care about you. I love you. You're my sweet baby. And that's partially because I love myself. Right? If it's symbiotic, I love you. I love me. So yeah, let's thrive together. That's why we meet here as a community every single day. So let me move over to the desktop. Yeah, easy peasy lemon squeezy. Jackie Mullen. So some people have browsers that apparently don't shut the music off after I shut it off. So maybe that helps. Let's do it that way. But you shouldn't hear background music anymore, Jackie. All right. All right. Now I can hear it. All right, so it's weird. So if I keep the tab open, it keeps playing for you. All right, I will try to remember to clicking that tab off for you. All right, cool. So what's going on? Well, we knew yesterday we went over the calendar, and I'm sure you probably went over the calendar last week looking forward. You know, there's a lot of risk event this week, right? The biggest one is actually tomorrow on Wednesday, interest rate decision, monetary policy in the United States of America. There's also non-farm payrolls on Friday. Both of these things are very, very big fundamental events. And when you run into scenarios like that, and even if you want to add some icing to the cake, you know, I think what 45 companies report today on the S&P 500, right? Like 10% of all the companies on the S&P 500 report today, which just means this is a pretty heavy reporting week. There's a lot going on, man, and maybe it's the type of week that you just don't get ginormous moves one way or the other. And maybe that actually happens next week. Can I do CAD yen? Yes, Barry, anything for you, Mr. Evans. Okay. So put this down as an observation. So imagine you went through the last 10 years of trading every single day, but you didn't pay attention. How much trading experience do you really have? None. Well, what if you pay attention and you every single day you observe the market and you ask yourself deep questions like why did it move this week? Why didn't it move this week? Could it be this variable? Maybe it's that other variable, and you write that down. You document in detail things. After 10 years, how much of experience do you have? Well, I wouldn't say 20 plus. Certainly one, maybe a little bit more because you really thought about it. As you think about it, you're reliving it, right? And then what if you write those notes down and you document your trades and you review your trades and you focus on improving little aspects of your trades over time? That's where you get into big happiness, lots of experience. That's how you become an expert. So, anyways, maybe some of the news events this week is why we don't have big moves. Other things, though, you see here, Euro Yen is basically a triple bottom. Okay. USD Yen is just slightly higher. Okay. It did kick off to 21. Did all those kinds of things. We had Aussie come up and then come back down, but that was all last week, right? Really, I think if you back yourself out just a bit, what's essentially happening is nothing. If you only traded daily charts or weekly charts, right? There's not massive moves. I know it's kind of hard to see in there. So I'm just saying, what I'm trying to allude to is maybe moves have started, maybe moves have not started, but you should still be in your plan somewhere, okay? Market conditions change, they constantly change, they change over time. You should, if you feel like you're going the wrong direction, you should go back through your fundamentals, go back through your long-term technical charts, and double check your bias. Very often what you find is you're just wrong now, and things will inevitably change, and inevitably, I mean in less than 2 weeks. We have these periods where things become so oversold that they can't fall any further, so then they rise for a week or two, and then the market continues its trend back down. What often I find is that traders that trade primarily on the shorter time frames, they lose sight of that, and they feel like market conditions have changed, and then they start trading against their better judgment, and then the trend continues, but they're not on that clue train. And what you find is you're always behind the curve. as Adam says, right? So like, look at this euro yen. Is there a bigger move going on this euro yen? Don't even worry about the 15-minute. So this is it's a subjective question, right? I could ask you to answer this, like almost like a job interview, right? I'll say, look, here's this daily chart, euro yen. Is it going up or is it going down? Did you see how you could argue that this is going down? Does everyone see that? You could argue it. In fact, I've already drawn it. Okay? But I think it's just as valid to say it's going up. Can everyone see that potential and why? Could you put down a couple of bullet points at least to argue that this is going up? Do you see why now you should not be surprised that we feel we're moving sideways? Look at this. Look at the bottom of this area here on these candles. We've moved sideways over 3 days, essentially. But is it really moving sideways, or is anything actually changed? I think if your bias is bullish, you should still be bullish. If your bias is bearish, you should still be bearish. And really, where are the bigger moves, right? The bigger moves occurred a long time ago. We set these suckers up. Okay? And so on the longer time frame, if you're a bull, you should say, well, I like being long where we are now. If I were me, I'd want to be along around 32-ish. In fact, somewhere between 32 and 31, I'd like to be long. Is that a valid plan for bulls? Being long somewhere between 31 and 32. Now your fallback position, your Alamo, where you know there's only by the Alamo is if the Alamo is overrun and you bust through this last line of defense, there's no other line of defense, right? Like everyone in the fort is dead, right? That's the Alamo. If you don't know your American history, right, that's when the Mexicans whooped Davy Crockett and his American friends. And don't even mention Ozzy Osbourne. But anyways, this is your Alamo. Down in here, this is another area for us to buy as a bull. Okay, you see that? So we're really sort of, this is a buy zone for us, and this is our last line of defense to buy. Which, you know, you can interpret that all kinds of ways. You could put stops down here and all that kind of stuff, right? So as a bull, should I be freaking out that it's been red for a week? 1, 2, 3, 4, 5 days. In fact, let me make a change here. Oh no. I want to see last month. All right. All right. Now for bears. Our plan for you was very clear, just in case you've forgotten. Because remember, I had it pointed down here. Just a week ago, we were at a weekly and monthly cluster of resistance. In fact, I bought this red candle, drove it up, and within 12 hours or something, I made somewhere between 100 and 150 pips. I don't even remember. I just threw the limit up there. I'm like, look, here's a cluster, weekly or monthly M4, weekly R2, and basically went to bed, woke up the next morning, and 150 pips in the pocket, done. Right? Where's my yellow Lambo? Done. Which is also an opportunity because it happened early in the week and we're at a monthly and weekly target that you can counter trend trade, right? I hope everyone remembers that because we chronicled it in great detail. Right, John says it depends on position size and all that. Yeah, so if you need more space, cut your lot size, right? Easy, right? So anyways, as a bear now, nothing has changed either. It's moved sideways. Should you be frustrated that it's stopped? You sold it literally a week ago. Yeah, nothing's changed for you. You're still a bear. This was also a Fibonacci retracement from this high, right? Imagine it this way. Okay. Imagine you looked at this high, this low, right? That's a fib, right? You look left, that's a beautiful entry off of there. So it's a very, very, very obvious short. And if you're a bear, you're thinking, well, you're only anticipating here a double bottom, which isn't even that great. So nothing's really changed for you. You should recognize, however, you're approaching an area where bulls are supposed to buy. Okay? Bulls are supposed to buy it here. It shouldn't be shocking to you that we're stuck in the mud. So is that helpful for an overview of our week, of kind of where we are? We're in sort of nomad's land right now, right? You're stuck between the machine guns. So a lot of people get frustrated in situations like this, like, it ain't moving, it's not moving, what's going on? Oh, it's this, it's that, the other thing. Well, we have a lot of news this week, but we're not, you're not in the safe zone. If you were a bear, why didn't you sell a week ago when I lined it up 9 reasons to sell? Right? And maybe this is your take profit zone. Maybe you're still selling rallies, but I want you to put this bigger picture into your piece, because newer traders only focus on the short term, and that's where you lose money, especially if you're trading and it's not moving, it's not breaking out. Because usually, like, big moves that are obviously happening are covering up your mistakes. I bet you anything you lose more money on consolidation periods than you do rally periods, because you could throw down a trade in a rally, let's say, and it's dumb luck that you happen to be going in the right area, and you let it run and it feels really good. But consistently doing it is the issue. Well, you have to then first tell yourself you're not going to consistently get lucky on catching rallies if your trading is inconsistent. So if you are simply a bear on euro yen, you should be up hundreds of pips profit. And you have a longer term view. And what happens over the last 72 hours is probably irrelevant. Okay? And if you've lost a lot of money in the last 7 hours, you're heavily trading in an area that maybe you shouldn't be heavily trading. In fact, you might be the biggest trader in the world in a market that's not moving, right? All right, so I'm just trying to put a lens on this, right? This has been very bearish. It was supposed to be very bearish. We're now in an area that could become very bullish, but you could look at this and think, well, it is very bullish. If you're a bull or if you are a bear, there are some nice trades here, but maybe not things that come and go in an hour and a half. That could get difficult to, let's say, anticipate in advance, right? So, whatever. Sometimes I think, at least I remember being stuck in the weeds a lot. Asking myself, why did that just happen? Versus, and then later, I tried to spend more time anticipating what happened instead of asking what just happened. Back myself out and say, well, what's going to happen tomorrow? Okay. So here's this busted trade plan, and it's a beautiful trade plan. It's beautiful, but it's failed. You should also learn to love the scenarios where you're wrong. I think in my book I talked about being proud of my losses, right? I don't think we traded this long, but I think it was a plan. You can see we have two plans here. If it were to reverse and you wanted to be a monthly swing trader, we happen to start the month. Now put this together, right? Put this together. On the last day of the month, we are sitting on the exact price for the monthly long swing. That also gets me to think that there's a lot of people in this market that are aware of these prices. Bears knew where that price was. Bulls knew what that price was. And somehow we created that as a neutral area, right? So the plan here is if you wanted to be long, we had the right price. Do we know if the market's going to go up or down? No, but we know the price in which we would want to go long. Is there a great opportunity to buy in here? Well, that is a subjective question. That depends on a lot of things like time frames and such. But we do know the price. Now, some people might have said, okay, treat it like a double bottom, make it high, make it low, and then long, and all these different things. It's all subjective. The bottom line is, if you traded this properly, as I outlined yesterday, it was a decent opportunity to go long if you got your trigger. And again, whatever your trigger is, moving average crossovers, oscillator rotations and cycles, patterns like 1, 2, 3s, whatever floats your boat, right? At least a higher high, higher low scenario. I mean, whatever. That's subjective. If you think it's going up, you got the right price. And if you trade close to the right price, then your stop isn't very far away, which means you're actually not risking very much money, so on and so forth. I don't know if you got your trigger. I think a lot of people didn't get their trigger. But I think other people may have been a lot more aggressive, which is fine, but then you're buying right at the pivot. And then it failed. But now you could go to the judge and jury. And they say, why did you go long? And you're like, well, first of all, I didn't lose that much money, so don't be too angry. But let's go through the pieces. First of all, fundamentally, blah, 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 blah. Second of all, looking at longer term charts, blah, 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 right? And so here we are today at the last day of the month, sitting on the M2. Now, being a fundamental bull, I am looking for things like double bottoms at that exact price, which I was given. So that, according to my rules of engagement, at the double bottom, at that specific price, on that specific day, I am allowed to buy, as long as I have my trigger. Now, because of all of this coming together at the exact price on the exact day I wanted to, I was aggressive. So I dropped into a smaller time frame. I looked for blah, 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 and I got it. So it's not me. It's not my fault. I did my job. I did it exceptionally well, and the market lied to me. But if you put me in 100 scenarios where I'm buying double bottoms with whatever entry on specific times, and you're giving me an opportunity to risk 40 pips but go for 280, I'm going to do it 100 times in a row. And I'm not going to lose most of the time. And my win-reward ratio, therefore, is going to be extremely high. And I'm going to make thousands of pips. So I lost 40 pips here. Get over it, judge and jury. Right? I would look at that and say, what kind of idiot sold it? But I have to be a bull to think that. But you see how there may have been a fantastic entry with unbelievable risk-reward ratios, which may have worked the majority of time over time, but this one didn't work. If you did it right, you lost. Okay, reverse this. You are a bear. Is there reasons to be a bear? Draghi, right here, this red candle, started to talk the euro down. You can point to a speech. You could actually say at what time would it have been? About 7:55 a.m. New York time. Mario Draghi, president of the European Central Bank, said blah, 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 blah. Goes the euro. To add insult to injury, right in here, the 10-year T-note hits a yield of 3.0, the highest in years, creating a spread over the German Bund by approximately 2.5%. Crazy spread over Bunds. This, at least on the short run, should be very negative to the euro dollar. Therefore, I am selling rallies. Okay? And blah, 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 blah. So now you start looking more closely. Let's go back to this 15-minute chart, let's say. Okay? You see how in here I have this coming up? It made a 50% retracement and down. Is it a good entry based on weeklies? No. Is it a good entry based on monthlies? No. But do you remember talking about trading out of position? I think we even talked about it last week, but I'm pretty certain I talked about it yesterday. I think we talked about using the 21 EMA and such, that you can't use the pivots because it is out of position. It is unusually weak, and it's going to be difficult to catch. So you use like moving averages, and in this case, we're using fibs. I really should have had it more like that. Okay, and you work your way down, but now you should anticipate you're going to hit your target early, and it's going to induce profit taking, and you can't stop it. It's just scientific fact. Can't stop it. Right? Can't stop it. Okay? You see how you could get really messed up opening up your charts, especially in a situation like that, and asking the chart, dear chart, I don't know what to do here. I really don't. I'm trying to figure out what the London boys are doing, and whatever the London boys have decided to do, I'd like to do that too. So I'm going to let it sort of break out and pull back, and that's going to tell me what all the smart people are doing. So once that's happened, then I would like to try to do that too after the fact, and maybe I can make some pips. And I'm going to do this little trick every day for the rest of my life and call it a career. It seems silly, doesn't it? Doesn't it? You don't agree? You like a London breakout strategy where you trap it and like, well, I guess if it goes up, I guess the London boys are buyers and it's already moved 50 pips, so I guess I'll buy it 50 pips out of position. All that kind of stuff. Um, what a silly thing to even ponder. You're going to wait for something to happen and then react to it. What a silly little dog and pony show that is, right? So how about you have a long-term bias set based on technical or fundamental analysis? um, but to me, it's insulting. In fact, just like the ad coming up, and he's like, "I'm going to teach you a little trick," and it's just like, what is this? It's stupid. But anyways, doesn't it seem better? I hope it does. I mean, I don't know to you or not, right? But I hope it seems better to you to have a bias set on long-term technicals and fundamental analysis and trade with that behind you. I mean, just as a professional, I think you would at least need to be able to say, well, I'm a bull on euro dollar. Now, market conditions over the last couple of weeks have been tough for me because Mario Draghi, the head of the ECB, is trying to talk down the euro because his monetary policy is hoping to see inflation. But it's difficult, right? It's difficult. So he has to talk the euro down. But that's actually giving me some opportunities down the road. They're actually setting up, right? So on and so forth. Now, getting into these prices, then you have to ask yourself, well, if it's going to go back up, if you're a bull on this, if it's going to go back up, when? Now, you see this gray zone? I wanted to show you why it's there. Does that look like a good place to sell to you if you were looking this far left? This is like 9 months ago. Did you sell on top of this? Look, let me connect them. That's where you'd like to sell? So do you feel better now as a bull if you feel like, dang, this thing's been falling for a week and a half now. I'm never going to get an opportunity, and maybe I'm wrong, and maybe euro dollar is going to fall all the way down to parity, and blah, 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 blah. Self-doubt, 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 give up, and then sell. Is this what you want to do as a bull? Self-doubt, 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 give up, and now sell? Now you want to sell it? That's where you want to sell it? Or do you want to say as a bull, oh, I wonder if it'll bounce at 120, because this is a wicked awesome place for a bounce. Yeah, Joe says buy stop, sell. Well, buy stop, buy stop. See, if you're getting yourself into good trades, Joe, right, at support, and you're having an opportunity to either reduce or remove risk, those break-even trades are totally acceptable, because you're putting yourself into good opportunities to make money and removing the risk. Doesn't mean you're going to survive, right? But I think if you resist that last one, buy stop to buy stop, sell. I think if you resist the sell one, and you're okay with putting yourself into good opportunities, even if they fail, you're getting free looks at the basket, so to speak. If you learn to be okay with that, you will survive on the long run, right? Because I believe it may go back up. Now, if it drops significantly below 120, well, maybe I'm going to have to, re-examine my bias. But right now, I think there's a reasonable propensity for this to want to go back up. And if I'm a bull and nothing fundamentally has changed and all that kind of stuff, there's I should be a buyer in the uptrend. And if it becomes less bullish on the shorter term, maybe I should stop buying so much on the retracement and then buy more on the new extension, right? Because what will happen is the market conditions will not favor you for a short bit, and then they will favor you on the long run. And if you're a trend trader buying in the uptrend and taking profit on the retracements, you should do, theoretically, you should do quite well, right? And isn't that where you're trying to get? And the biggest part of succeeding, I think, is not losing a lot of money on these retracements. Right? Isn't that the key? And now maybe start tiptoeing back in, but don't get frustrated. Okay? Back yourself out, guys. Back yourself out. There's more going on in the world than your 15-minute chart. Okay? Do you actually want to sell here at 120? Does anyone want to sell here? Even the bears. Are there any bears that are salivating at the opportunity of selling right before 120? I bet you some of you guys weren't going to sell. Yeah, Joe's like, well, maybe this is that's always right. That's always the break in the armor. The flaw in the armor is like, well, no, I'd never do that, but I might do it as a scalp. Well, yeah, but then you've lost your discipline, right? So, anyways, so put it that way. Nobody on the planet is buying this right now, right? And nobody should be selling it. So maybe you could put together a trade plan. Maybe this is an opportunity to buy, because we know bears shouldn't be selling it. And we know bulls are thinking about buying, but not yet. So what would make a bull buy? And now you put that together. If you can't sell it here, where could you sell it? How about 120.50? Would you sell it at 120.50? So you start picking your lines. What are the prices? If not 120.50, then what is it? A weekly pivot, a monthly pivot, a cluster, a midpoint psych level? Are you going to sell it at 121? Or is that too high? Have you broken through your Alamo? Is that too high? Is that bullish now? These are called trade plans. Okay. Okay, guys. So that's mega trader psychology stuff today. So I hope that was well received, because I could feel the frustration. And I go, oh, they ain't doing this and they ain't doing that. Da, 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 da. Back out, take a better look at it, and you'll see, well, that it actually makes a lot of sense, doesn't it? Okay, CAD yen. It actually makes sense. All right. All right, here's CAD yen. Go to the 4-hour. Coincidence, right? Boop, 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 boop. Isn't that beautiful? I love trading. I don't know if you figured that out. I actually love it. Like just this goes back, I don't know what it was, but way right, or sorry, way left. And it clearly created this, and it clearly created this. And finally we broke above it and it switched over role reversal, even double bottom. What used to be resistance is now support. And then of course you look left again, way back here, and there was a thing that clearly caused all this consolidation. You know, that's like a whole day and a half of trading. Shouldn't be that shocking, right? And look at this, 2.5 months later, that's created, but we know it was created by something way left. Well, I guess my camera's backwards, so way left. Okay? Well, I don't know if I want to call it hardcore resistance. I'd rather call it obvious resistance. Okay? To a bull, they're thinking this. Snap! What is this dotted line? What is that? It's right in the middle of my monthly pivot profit zone. What is that, guys? I think all that stuff is fairly obvious, guys. Oil prices are up to like 15 bucks over the last couple of months. Like, why wouldn't that be higher? Someone else said the tariff, Brooks's tariff deadline extended. Yeah, I mean, I think that's pretty obvious too. But anyways, yeah, the take profit. So I'm long, right? Cool. Okay. So going back to a weekly swing, where should I buy? Where should I buy? Weekly swing. Just not this price or anything. Just what pivot? Israel is wrong. Joe is better. Yeah. No. Joe, what? Joe, what are you talking about? Oh, you must mean M2. You're like weekly R2. Joe picked out the exact worst. Oh, target. No, but your week. I don't know where you guys are getting this. This weekly pivot point is not the ideal pivot. You must be reading someone else's book or something. That it's the weekly central it's less ideal. Sometimes it presents itself, but it's not the best to be buying. It really isn't. But anyways, let's just go with it. Anyone that's taken the swing trading course knows that this is the price you want to buy, because that's when I bought it. Okay. No, not a psych level and all that. Right? Strategic and tactical Forex trading. Yeah. You know, it is pretty old though now. I wrote it. Oh no, it was published 10 years ago, which means I wrote it 11 years ago. I still think it totally is valid. Like nothing has changed in my trading since I wrote it. But you probably you might want to just look around fxbootcamp.com as well. That's all I'm saying. But anyways, anyone that's taken my swing trading course knows that that's the obvious buy, and I'm still in it. So whoever asked about CAD yen, I'm like, yeah, okay, nothing's really changed. We are approaching a challenge up in here, but what am I going to do, right? Did I buy the SEC test? Honestly, I don't recall. I probably bought it on Friday, in fact. So one of the things we do in the swing trading group is we front run weekly and monthly positions. It's one of the things that the swing trading does. Yeah. So we front run them, which means we're very often in the trades before the rest of the world even sees the pivot. So, but it's not required. But anyway, so I'm just saying, like that's a boring, stupid, easy, straightforward trade. And being in here for the new week, it doesn't get us out of the trade. Yeah, I could move the stop up. Yeah, I mean, sure. Seems like a I don't know, scaredy pants thing to do, but sure, I can move this. Where would I move it? Mm, 60. All right. So, anyways, I've locked in 50 pips. Does that make you feel better? Yeah. Cool. Yeah, I used to have a rule that I would move it 15 pips a day because that was my minimal acceptable performance. If you guys remember the map idea. But very often, what I would do on my swing trades and my carry trades, what I would do, and I'm not sure if this is in the book or not. What I would do is I would log into my trading account on the weekend when I couldn't actually implement any changes. That way, I wouldn't do anything irrational, which is the same as saying I'm making emotional decisions. So I would open up my account on a Saturday and I would look at my carry trades and I would enter in manually back then because you couldn't just move a stop. It was way before you could even do that on a chart. And I would manually enter so that all my stops moved 75 pips, but I had to do it on every trade. So 75 pips, 75 pips, 75 pips, 75 pips. And the logic there is on Monday when the market opened, now all the adjustments I made were entered, and I locked in MAP times 5, right? So that I made basically all my trades had that minimal acceptable performance locked in, even though the trades might have been moved 250 pips. So back then, like making 1,000 pips was so locking in 75 when you're up 300 for the week, it was very conservative. People kind of laughed, but it kept me in trades longer, and I felt fine because had I traded not let's say you make 3 trades and they're all spot trades. You're trading 15-minute charts. Um, one trade wins, one trade fails, one trade breaks even, and there's 5 hours of trading. 15 pips actually seemed like a lot of pips. So to know that to lock in 75 for the week and you were done for the week felt pretty nice. And then I would take all this time. I might spend a day or two just identifying the next levels of price where I might buy and add again, knowing that I've already made 75 pips this week and I haven't done jack, right? So I had all this freedom now to set up the next trade and all that kind of stuff and then move. But the real scary part is then you have this blockbuster week where the yen pairs would really take off. And now you're like, oh, do I, if I took profit now, it's 10 weeks of locking in MAP weekly. You see that problem? Like, let's say you have the choice, keep moving the 75 pips, but if you took profit now, right? Like all your let's say your 5 positions now are 750 pips above that, and now you're like, oh, I want this to run. I like collecting the interest payments, but like 10 weeks, a lot could happen in 10 weeks, right? I could give back those 750 pips in 10 days, but 10 weeks. And all of a sudden you have a nail biter. What do? Do you take your money and run, or do you let the positions run? Who runs, the position or you? Ugh, I'm telling you, it's going to be crazy difficult. Yeah. You know what that actually means, Emilio? So I don't know if you guys are freaking out. I mean, I bought it 2 weeks ago. Why would I be surprised if it's going up? Right? It comes from falconry. A falcon on your arm is worth more than the 2 birds he can kill and capture and bring back for you to eat. The bird on your hand is worth 100 birds in the bush, but it's certainly worth more than 2 in the bush, right? So anyway, So yeah. So this is going up. This is kind of a good review session then, because how long have we been talking about improvement in the CAD, um, more up in oil than down, improving global macroeconomics, USD CAD should be falling. If I back out here, all I have is sell plans, right? I don't even have a buy plan. Now the US dollar's strong. I get it. It doesn't mean I have to be a buyer. Right. Ernie brings out a point. It's stressful when you're losing and stressful when you're winning. You got to get beyond that. And I hope I bring some of that to these webinars with you guys, because I realized that fairly early in my career. I realized that losing money was devastating to me emotionally. Like, like really, because I was over leveraged and all this kind of stuff. And I just quit my job as vice president of a firm with hundreds of employees. I had a beautiful office. I had this awesome, cozy, cool little life doing things I enjoyed. Okay, I gave all that up to trade Forex, and like working all night, 10 o'clock at night to 10 o'clock in the morning, and losing money, and then working 10 o'clock at night to 10 o'clock in the morning a second day and losing money again, and then working all night from 10 o'clock at night to 10 o'clock in the morning and losing money again, and then thinking about, well, if I had just kept my job, I wouldn't have to work all night. I would have made money. I would have had benefits. Like, oh my God, what did I do? I threw my career away to be a currency trader. Like, holy crap. And then I found if I made money, why wasn't it more money? Why did I only make 50 pips? I could have made 100. Why did I make 100 pips? I could have made 150. Why didn't I take profit at 100 pips? I only got 75. Why didn't I get out 100? All of a sudden, there was this awesome level of gobbledygoo in my life, mentally and emotionally. I was never happy. So we often have a good time together in these webinars. I don't mean to like belittle what we do. I'm not trying to be a clown per se, but it's hard to survive this gig, guys, if you don't love what you do and have fun while you're doing it and learn to let the stress go. I used to push the little button on my mouse to say bye, and then sound would go away. Just like my whole world would go numb. With stress, it's going to get you here or some ailment. Your back's going to go, your knees and hips are going to go, your eyes are going to, but it's the stress, right? So you, as a survival instinct, you're going to need to address it. I actually addressed it in my business planning retreat. So what will you do? Okay? And it's always going to be stressful, but what is your tactic for that, right? How are you going to be able to feel comfortable losing money? Well, how about that one I showed you where if you were a bull and you bought the double bottom at a monthly support pivot, and on a 15-minute chart you got a Stokes cycle with a 5A cross up and you bought it? If you fail, that was a good trade, bro. It's hard to get to that place of peace. You have to be pretty centered. You have to be pretty confident. Well, how do you get past the self-doubt? I don't know what I'm doing. I lost money because I don't know what I'm doing. It's because you don't know what you're doing. This is why you need to stick to a bias. When the market agrees with your bias, you're going to do well. When the market doesn't agree with your bias, you're either going to lose a little bit of money, like that trade I showed you. If you were a bull and you got all that together and you lost, all right, it was a great trade. It was worth the shot. You lost a little bit of money. But more often than not, you're not going to get your trade setups. You're not going to get your price. It's not going to bounce at your support. And you just have a week or two where there's not a lot of trading. But what you have to grow and mature to is knowing that there's going to be a period of 4 or 6 weeks where you're going to trade a lot, and you're going to make your money there. I've shown people in these webinars many times that you could go 10 or 12 weeks with mediocrity. And then the next 12 weeks, you'll make 10,000 pips. But most people lose so much money and so much confidence in the 12 weeks that nothing happens, that by the time it happens, they miss it. Or they're already trying the London breakout strategy or something stupid, right? Adam, yes. But remember, it's relative. So there's also business cycles, Adam. Like this more recent downturn over the last 10 years is a complicated issue. So it's also like growth spurred by central banking policy, right? And business opportunities to put money to work. So if the United States is pulling out of the bond market and they're investing into businesses, at first they were buying U.S. businesses, but now they're expensive. Buying a house might be 30% more expensive than it, right? Like my house has gone up 30% in 8 years or something like that. It's pretty good, right? But now, like, would I buy my house at this price? Hell no, it's way too expensive, right? But but then you go to another country. If I were buying businesses, what did I tell you guys a year and a half ago? Start buying Dutch businesses for cheap. Start buying, German businesses for cheap, because that's what venture capitalists and private equity firms and hedge funds are going to start doing. Does anyone remember that? Like a year and a half ago, I'm like literally talking about private equity funds. They're going to start gobbling up Europe. And nobody wants Europe. Europe is worthless. The euro is dog meat. Time to buy. Come on, get in there. Right? Why, right? So why would you do that, right? Because the good opportunities in the United States have been taken. And if they're overvalued here, bear in mind the stock market was like at the peak. We had gone 100% retracement, made up all that lost ground. So what are you going to do now? Like buy the stock market? What are you going to do now? Buy Apple at a 10 million times earnings? Like Apple sucks. When are you going to figure that out? So like, really? So what are you going to do with your money if you're smart money? You're sitting on $1 billion in cash. You're going to buy more Facebook? Like, you already have Facebook. What are you going to do? By the way, Facebook sucks. So what are you going to do with your money? Well, let's venture over to Europe. Prices are cheap there. The worst is over in Europe. Maybe we can buy some of this and buy some of that, and we'll get some cheap prices. And Euro's down, their prices are down, and the Euro's down, right? And what started to happen? The Euro started to go up, and the dollar started to weaken. So, Adam, is it all monetary policy? Certainly it is a derivative of the central banking policy, okay? But then Then you have to be sort of the smart money on top of that. Where would you place your $1 billion? So I think at this time, guys, I asked some of you guys, literally, I said, if you had $1 billion and you can invest it into anything, stocks, bonds, commodities, real estate, whatever, build a diversified global portfolio and actually write it down. What can you buy cheap now that's going to be expensive in 10 years? Does anyone remember that exercise? And I was trying to get you to think big, think smart, right? Because that is how the currency market's going to work. Where will oil prices be June 1st? Where will oil prices be December 31st? Why? Answer that. Right? Do the research. Write it down. What about wheat? What about copper? What about the stock market? What about the bond market? What about that's all what this is. Now you take all of that and you squeeze it, right, into a cannonball, a lead cannonball. That becomes central banking policy. Okay? And now, if you're smart money, how are you going to play all the different banks off of each other? Okay? But don't think about what has happened. Think about what will happen in the next couple of years. Okay? It's a fun gig, right? You will learn if you survive this, guys. I really think 10 years from now, when you're handling the stress, for example, you'll realize Wayne's right. It comes from having a bias and a conviction and a tradable point of view. And I'm a buyer, so I simply identify levels of support. And if I get if I get a technical entry like a reversal pattern or a crossover or whatever, I simply buy at that support. And when it's really, really bearish, it doesn't seem to bounce at these levels. I don't seem to get entries. I'm just like 2, 3, 4 weeks go by and I don't do a lot. But it's sure not, at least it's stress-free, right? And you'll appreciate it maybe then. And then when the markets turn and go up like you should, and remember, you've done your bias, you've formed your bias properly. You've done your fundamentals properly. On the long run, you will be right. Agreed? On the long run, the fundamentals create the trends. So if it's not working great today and yesterday, does that matter by the end of the year? Are you going to say, wow, it was a fantastic year, but gee whiz, that whole April 30th, May 1st period was unbearable, right? Whew. I blew up 50% of my trade account on April 30th. It just wouldn't move. Like, all of that should be irrelevant, right? Well, namaste, John. You'll need to get there. You'll need to find, right? Yeah. 3 unbelievable years of scalping. I agree with that. I traded the 1 minute chart exclusively for 1 year. And I learned a lot. You know what the most I learned? The biggest lesson I learned after trading the 1 minute chart for an entire year? No. I did fine. It's not scalable. It's a full-time job. Okay? You can get rich, but you'll never be wealthy. A rich person is like a doctor or a lawyer or a business owner that has lots of toys, nice house, but has to go to work every single day. Okay? It's income driven. Okay? I don't care if you make $1 million a year. If you have a job, you're poor. Because rich to me is poor. If you have a job, you're poor. Right? Wealth is money that makes more money. And that more money makes more money on top of the more money. And then that money that made from the money that made for the money makes money. So how much money are you going to make tomorrow if you don't scalp? Okay? How much money? You're a scalper. It's the only thing you're going to do. But you decide to take the kids to the beach tomorrow. How much money are you going to make? Well, John just said, depends on your investment portfolio. Well, you're not going to make any money scalping. And to me, that's the aha moment. Like, if I sit on my charts day and night on a 1 minute chart, which means I'm hyper alert, I can make money. But the second I stop, it stops. Now, here's the other thing you'll notice too, because I used to be primarily shorter term trading, right? So I loved like the 1 minute chart, the 15-minute chart, the 5 minute, the 3 minute, the 2 minute, the 1 minute. I've done it all, right? That used to be the big part of it, right? But then I take a day off and I take the wife and kids to beautiful beach, Ritz-Carlton kind of scenario, and I'm sitting there. I'm like, I just spent 800 pips. And then we go out to dinner. I'm like, this cost me like 250 pips. Then we go to the bar and I get my bar tab for the day. I'm like, that's like 290 pips. Do you know how hard I have to work for 290 pips? And I'm getting this bill and I'm calculating everything in pips. I'm like, this is like 200 trades. But I'm calculating everything in pips. I'm like, holy crap, not only did I not make money today, I'm like, I've lost all these pips. And I was going nuts, right? Now reverse it. I've done the exact same thing. Different Ritz-Carlton, different scenario, but I'm sitting there by the pool. The kids were still young, so I remember this situation, right? The kids are still young. They're in like the little wading pool, and they got the little ball and their little ring, and they're sitting in there, splash, 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 splash. And my wife's so tired because she still didn't sleep much because of the kids, right? I'm sitting by the pool, and I got my phone on. I'm all slouched over, drinking my drink, and I got my phone. I'm scrolling through my account, and I'm like, already paid for. Thank you, swing trades. Like, I just like, damn, yen just took off again, and let's, right, T-bone for supper, right? Yeah, but that's how I looked at it, Mike. So, and then I realized this is it because I remember the other situation where like, this sucks. I want to leave the Ritz Carlton. I want to just go home. I need to trade. We're spending money versus like, okay. And so the longer term trades, especially the fundamental trades, the carry trades primarily, and this depends on time of year as well, is a wealth driven strategy where you've built a portfolio of what you're earning. You're earning the carry trade, right? So you're earning interest, but you're sitting in trades longer where, um, you know, you wake up in the morning and you've made 100 pips, right? I'm like, well, look at that. My position's up. Made 100 pips today. I haven't even got out of bed yet. And then here's one other thing. Okay. At certain times of the year, you have the potential, if you do it right and things go right. So it's a two-part thing. It happens many of the years. You can get in situations where you have more than 10,000 pips. It might be 15,000 pips. 5,000 pips would be disappointing. And you just simply can't do that scalping. I don't know what a big month is to you, scalping. I would highly doubt it's 1,000 pips, but like 10,000 pips, I just don't think you can. I mean, you can't even think it. I mean, you can't even think half that, or even the 1,000 pips. You just like 1,000 pips. You know, when you cash out, you have, let's say, 25 trades open because you've been in them for 12 weeks, and you have 25 trades open. You walk away, and then you hit the out button. You have 5, 6, 7, 8, 9, 10, 11, 12, 13, 14,000 pips. That's how you do it. I think I did a video many years ago called "How to Get Filthy Stinking Rich Trading Forex." It's letting your winners run, guys. I think a good scalper makes 100 pips a day. Maybe not every day, but you can make 100 pips a day scalping. But I could wake up having made 100 pips. Shoot, I could wake up with 1,000 pips because I have 10 trades that popped 100 pips overnight because of news in Asia or news in Europe. I wake up and my 10 positions have made 100 pips each because they're all a position. They're all, let's say, short Japanese yen. And all of a sudden, I'm like, boom, I made 1,000 pips while I slept. That happens. It's not so uncommon. And that's a good month for a scalper. At least for me as a scalper, that's a heck of a month. But it's hard to do it month after month after month, year after year after year. I find that you just burn out. So, and that's when I discovered crack cocaine. Oh my, crack cocaine. No, I don't do drugs. So maybe I just burn out because I don't do drugs, but I don't do drugs. So I don't know what else you would need to be able to keep scalping day and night. I guess it's probably meth or something, right? Kids, I don't recommend meth and trading Forex. I can tell you, someone that I mentored, oh my gosh, 8 years ago, maybe even longer. He had some sort of like surgery. This is a true story, guys. He had some sort of surgery and they gave him some crazy medication and he started trading on his meds. Do you think that's a good idea? No, yeah, he had serious losses. Yeah, he had serious losses, and it was his medication. Yeah, yeah. So keep a sound mind. Anyways, so I think I've taken too much of your time today. I apologize for that. Um, you know, look on the bright side of trading. Take a longer look at what you're doing. Don't get caught up in the noise of the here and now. Um, be patient, be disciplined, right? And behave the way you want to behave. Ask yourself, what kind of trader do you want to be as a professional? And start behaving that way. Yeah. Cool. Well, peace on earth. May the pips be with you. May your profits be above average. And I will see you tomorrow. Tomorrow is going to be an interesting day. Yeah. And for everyone, for my portfolio managers, um, let's do like a 45-minute session um, over at the team site. Okay. Remember, we're going to start accepting portfolio managers that are not ready to trade live money, or they don't have enough to open their account. That's fine. You don't have to trade the 25,000. Okay. Yes, of course. Okay. So some people are just not ready, or they don't have enough money, because again, the model is you put 5,000 into an account and we increase that by another 20,000, right? At a 400% increase. So now when you start trading as a portfolio manager, you're trading 25,000. Okay. It's a nice start. A 400% boost is a nice start to a young emerging manager, right? Some people are just not ready for that, but they want to learn how to be a portfolio manager. So what we're doing now is you can still join the team. We'll still give you a currency pair and a bias to focus on. You can still get the experience of a portfolio manager. Um, but we'll hold off on the real money. So you'll trade a demo account of 25,000. So when you're ready in 3 months, 6 months, in a year, whatever, when you're ready to trade the real money, then we'll switch you over from the demo server to the real server. Okay, just to let you know. Does that make sense, guys? Hopefully you like that opportunity, because I think, again, I think it's going to fix a lot of people's problems, bring a lot of confidence to people. Oh yeah, everything else will be fine, Kyle. Right? It's the same service, but yeah. Ernie, that's metatraders.com. So, anyways, I got to go hang out with the team. I might even, we're going to discuss meeting almost on a daily basis. So, anyways, so peace on earth. May the pips be with you. May your profits be above average. And thank you again for being a client to Traders Way. I hope you do feel that these webinars every day are truly an investment into your success as a currency trader. I hope you feel like they're not just rally speeches to get you to overtrade, because that benefits us as a broker. I hope use you sense the principles and values behind what we do every day. Barry says, is the team the? Uh, I don't know if I understand that, Barry. Cool. Right on, guys. So, see you guys. Cheers.